So we're recording. Hello traders, it's Samurai Trader here. Welcome to session 118. This will be part one. I'll do this video in a couple of sessions because a wise man once said that that the mind can only absorb what the seat can endure. So what I want to share with you today could easily take an hour, so I'll break this down into a couple of sessions because I want to lay a great foundation, because we're going to be looking at some live trades, where I entered, why I entered, why I exited. We're going to be talking about pivots, which are the best markets to day trade, and a whole range of things here. We'll also look at, as we finish this session, I just fired off a little trade on the RTY, which is what we're going to be focusing on, so we'll just have a look at that one as well. So if $1,000 a day is not enough for your traders, you increase the number of contracts that you trade. So as always, let me just control this. We do need to pull up the disclaimer. There is a risk in trading. Don't trade with money that you can't afford to lose. Stay on the simulator until you are consistently profitable. And one of the things that we're going to be exploring in today's session is how to start with a small account and build it into a very large account in under a year, doing it realistically. Okay, none of this incredible compounding. Look, I'll show you the table in a moment. The other thing we're going to be looking at closely today is, I just can't believe the amount of crap on the internet, or even people posting notes and saying, oh, you can never trade these setups, etc. We're going to be exploring the logic behind the setups and why they work so well. And so traders, I'm going to show you a few comments from members. I actually asked them in my live trading room last week. I said, tell me what your biggest challenges are, and I'll show you what those are, and we'll briefly talk about those, because traders, you can do this. You can master the art of day trading, but you've also got to leave the past behind. If you've made mistakes up till now, treat it as a learning experience. You have to do that. But also, it's very, very important that you be open-minded to what I show you here today. And that is, we know there's two types of mindset. We have what we call the growth mindset. Doesn't mean you don't verify something, but you'll at least be open-minded of a possibility. But what I tend to find, there's so many people out there have a fixed mindset. No, that doesn't work. I tried it before. Well, have they really worked out why it hasn't worked before? Was it the time frame was too fast? Was it lack of discipline? Was there money management rules shot? Did they even have a trading plan? You've got to remember, traders, that day trading is a zero-sum game, particularly when it comes to Forex trading. For you to make money, someone has to lose money. We're trading against traders that have been trading for maybe 30-40 years. I've been trading now for 28 years. My job is to take money from your account, that is to drain your trading account. Now the great thing is that day trading is not rocket science. It's about following the rules, and we're going to be looking very closely at rules-based strategies that are pattern-based, that you can identify and that we see in the market each and every day. The geometric patterns that plot time and time again. At least be open-minded, traders. It's just so important. Now, very quick ad and we'll move on. Okay, if you haven't already downloaded my training manual, click on the description link below. Make sure you subscribe to my channel. I put out 1 to 2, sometimes 3 videos a week, and so you can keep up to those, and particularly if you're after want to see session 2 on what we're going to be covering today. Better still, become a member for $197. Everything I show you here today you can get hold of. There's over 200 hours of online training. And you don't have to watch it all. In fact, what is really important, you focus like a laser beam. I'll be showing you a number of different setups, but you want to focus just on a couple initially. We'll talk about that as well. And also included in the 197 is a bonus. You can attend 8 of my live coaching sessions. That's where you get to log in 6 p.m. to 8 p.m. Eastern Standard Time, Tuesday and Wednesday evenings. They are recorded if you can't attend the live sessions, where you get to watch, listen and learn as I explain the setups step by step. Okay, trading is a business. Now you know what's happening now. Traders are already saying I'm bored and they want to move on to the next best thing. Okay, we've got to lay the foundation here, right? Because once you have clarity, trading becomes so much easier. So trading is a business, and so as a business we've got to have targets. We've got to set some realistic goals. They've got to be a bit of a stretch because you can do this, not too hard, not too easy, just right. But what if you could earn $1,000, $2,000 a day? It'd be a life changer for most people. And so I love the concept trading as a business. In fact, the late Dick Diamond wrote a book, Trading as a Business. Now how do we realistically get there? We'll trade 10 contracts by $100 a day or 5 contracts by $200 a day. Now I know that there's so much stuff out there you can earn $500-600 a day per contract. Is that true? Absolutely. And I should also say that whether you trade stocks, futures or forex, you can apply what I'm teaching you here to any of those markets as well. But let's also be realistic with our targets. Now I want you to stop looking at why the setups don't work, okay? Because you develop what we call a scotoma. You become blind to why they do work. I'll walk you through the logic. We have to consider the logic of why they work. These trades, these setups kick butt day in, day out. There's nothing magical, as Gann famously said. There's nothing new under the sun, and it's true, but it's about having rules-based strategies that anyone can see visually and anyone can learn. Now I mentioned this, and this is critical, traders. Trading truly is 90% head stuff. I always say that trading is 90% head stuff, 5% money management and 5% the strategy. Once again, most traders don't want to hear this, and they wonder, you know what they want to do? They'll blame the setup. They'll blame whoever they bought the trading system from or the strategies. That's what the majority of traders do. But let's drill down and let's fix what the issue is. Most of it is head stuff. And so last week, it was on the 27th of the 11th, and this is straight out of a questions log, by the way. I said to the members in the room, can you just tell me what's your greatest challenge with your trading right now? And so one of their members, and so I've left their names out of it, of course, but technical and impulse trading, that is just understanding some of the basics. Discipline, making sure I'm trading in the right direction. That's why we use an anchor chart. I'll show you that today. Discipline, it's difficult to take more than 2 to 3 trades a day. That's because of fear. It was a fear issue. So looking at some of these others, staying focused on only the targeted setups, not trading on impulse. Impulse, revenge trading, these are all different traders, by the way. I did what you said on the 2B trade. It seems to be working out, and what that was another member that in the room, in the chat box, said, look, I'm just not getting where I want to be. And I said, cut back the number of setups, because I'll show you how I trade divergence. I trade with the trend, counter trend, trend continuation setups. But when you first start to trade, you must limit your trading. You've got to develop laser focus. And as he said here, it seems to be working for him. I can't take my profit and go. I overtrade leverage. Not being afraid to execute. Well, here it's actually being afraid to execute. So I've just taken it straight out of the script here, out of their chat box here. So I didn't what's the word for it? correct the spelling there or anything. If a trade doesn't set up every few minutes, I force a trade, not logging my trades. What that means is jotting them down, having your trading journal. Ray, my biggest challenge is impulse trading, analysis paralysis, following my trading rules. It goes on and on. Traders, these are the most common issues that traders face. And so not only do you have to work hard on getting the screen time and the setups, but you've also got to work harder on yourself. Now, I'm breaking all the rules of selling here because ultimately I want you to join and buy my program. If you do, if great, you'll be in my room, and hopefully you'll then want to join my live trading room. If not, okay, still learn, stay open-minded. You're going to pick up a ton of ideas. If you want to master the art of day trading, come and join me. Now let's really make sure we start to drill down on some of the essentials. So much I want to teach you here. First of all, we want to be trading in the direction of the higher time frame. For an example, the trade I just fired off 10-15 minutes ago. Now I'm actually recording this at 6:53 p.m. Central Standard Time, so you'll see in a moment the trade I fired off. I'll show you what that is, and you'll see it. But what I was doing was trading in the direction of a higher time frame. What we want to be doing is looking for the retracements, the pullbacks, and the continuations, and then at times we're then going to have reversal trades. They're going to be our divergence trades. By the way, for lighting's not great, you'll have to excuse me. I don't have a professional room set up here. I've just got a lamp, so the main thing is what's on the screen here. So we're looking for retracements, pullbacks, and then trend continuation setups. Now what's absolutely critical here is, the late Dick Diamond said here, is you've got to be patient. And this is the big thing that comes out, and as you just saw from some of our members, where they said lack of discipline, impulse trading. You've got to master these. And sorry if I look up, I'm just looking at some of the setups that we just got. Another one setting up right now, which will be an EMA bounce. As Dick Diamond says, you've got to be like the cat in the bushes when you see it, ready to pounce. But we've got to patiently sit back and wait. Now with the time frames I'm going to be showing you here today, some traders, without being open-minded, they say it won't work, it won't work. You know what, you're absolutely right. If you're trading the wrong time frame, in today's training we're going to be looking at Renko charts. But if you're trying to trade a 1 or 2 tick Renko chart during the New York session, forget it. You're going to get killed. You're going to get whipsawed. If you're trading, for an example, right now we're trading during the Globex session for 2 to 3 tick, and in fact I was trading a 4 tick just before the trade I did execute. But generally this time of day I'm going to be trading a 2 tick on whichever market, provided the time frame is right. So which is the right time frame to be trading? Whichever is what we call tradable. Now you can be trading, you can use time-based charts, of course. You can use tick. For an example, during the Globex session, if I'm trading say CL during New York, I like a 233 tick. This time of day you might be trading a 55 tick on CL on oil. So you've got to adapt the right time frame. Now I prefer Renko charts, as you're going to see. Why? Because they kick butt with the setups and the patterns that we trade. I love tick. Time-based chart, I think big candles are evil, okay, because I like to tuck my stop under or above the closest swing high. So I want to be in fairly quickly. So what's really important is you can apply these setups to any time frame. Now, so you'll have to excuse me for looking, because if I see something important I'll point it out live to you. Now if you're a new trader, or perhaps if you're not a new trader but you're considering, which is the right market, if perhaps trading hasn't been good for you up till now, are you actually trading the right market? So here we can see here, so this is from the Ninja Trader, what would you call it, product code, shows the commissions, the intraday margins, etc. You can see here, traders, you've got multiple, there's literally dozens of options. So which is the market that I like to trade? What am I looking for in a market to trade? Because this is important to you. We want to have some volatility. Now, you don't want to have crazy volatility. Now, for an example, around red flag news, that's not my cup of tea. I don't trade. I'll trade the reaction to the news, that is after the news, but I won't trade red flag news. For me, maybe you can do it, I can't do it. It's just not my cup of tea. I'm looking for markets that give me good legs, or that gives me the waves, that trends well. So that's really important to me, so I'm looking for that. I'm also looking for markets that have good daily trading volume. Now, you don't have to go this far, but for many years now I keep a track of different markets. Here are the markets that I'm interested in. Now, you can't trade them all. Become a specialist. Look for 2 or 3, maybe 4 markets that you're interested in, but I'm really interested in the volume. Now, that tells me a couple of things. Okay, so I log in at 4 a.m. my time in Australia, is taking into account where I'm based, and daylight savings is 12 p.m. Central Standard Time. So I want to start trading. Generally, I'll get up at 4. If I'm going to trade the afternoon session, 5 a.m. is ideal. 4:35 I can have a coffee, I can wake up, and it's around 1 p.m. So I'm looking for markets I can trade in the afternoon. The morning markets, it's just too late in the evening. It's not good for me. I'm staying up in the middle of the night, 11, 12, 1 a.m. in the morning. So for an example, the ES, the 6J, which we'll talk about in a moment, is a fantastic market to trade, but not in the afternoon. It's too slow, the yen. But you've got, why the yen? You've got some fantastic trading volume on the yen. But so I'm looking for markets that are tradable. Now, the other thing here is, because I'm trading during the Globex session, this is a screenshot of 5 to 6 p.m. I like to look at what the volumes have been 5 to 6 p.m. very early morning US time. Why? For an example, the yen, 32,000 contracts. It may not sound like a lot, but if you're an 8 to 10 lot trader, I trade 8 lots on this market. It's perfect. Okay, so if you're a 5 to 10 contract trader, there's some fantastic markets to trade after hours. Look at the ES there, 29,000 contracts, etc. On the micro NQ, 49,000. So what's important, and the point I'm trying to get across here, is you've got to find tradable markets. Now, one of those markets that does give you some great opportunities is the yen. Besides yen, is the RTY, the Russell. My apologies, the Russell. So we'll look at the Russell in a moment. When we close off this session, I'll go to the live charts and we'll just have a look at some of the opportunities we've had, and the trade I took just before I started recording. But in the meantime, I want to talk to you about the afternoon session, the New York session. So, and just to discuss this, so here it is. Right, look, let me just drag this down straight away. You'll see this anyway. This is the 4 tick here. I fired off a trade over here just before. You'll see this on another screen. I had one here. I've got the dome switched off here. This is what I call an anchor chart 1 for a lower time frame, but anyway, you'll see that here. We just had another one here, and we just had, there would have been another one there, and another perfect one just here. What can you see on the chart? See the black line there, and see the purple line, and see that white line. That's yesterday's close. You can also see here I've got fantastic divergence. Now, maybe you can't see that initially as a new trader, but these patterns we see each and every day. High on price and a pivot bounce, and a lower high. High on price, pivot bounce. Okay, and see my trigger line there. I've turned off the arrows, but they also give you great signals and further divergence. And you just had another bounce just there. All of these are patterns. Now, I'll show you some better examples now. I just couldn't help but showing you that right now, but let's just have a look at this here. This is the 4 tick, and this is from midday Central Standard Time. So there are multiple entries. Now, one of the questions from one of the quotes that I gave you there from one of the members is identifying the trend, or making sure I'm trading in the direction of the right time frame. Now here you can see, here you can follow the cloud. Now up here it's blue, turns orange, and it doesn't matter if you've got a trading platform where you don't have, this is on NinjaTrader, you're following your EMAs. Okay, do I have high highs and high lows? Once we generally start to make lower lows and lower highs, we generally start to turn. So what I've got here, it's a trade entry. You've got, and I didn't mark all of these. See the arrows there? That's my turning point indicator. You can use it for reversals or trend continuation trades, and yes, it turns on that candle or the very next one. It just kicks butt, and you'll be amazed at how simple it is when you discover what it is. See up here, you've got a nice double top. Okay, no divergence on the entry chart. You had some divergence there, but on higher time frames you'd see you had great divergence. Now I want to be quick on a couple of these, because what I'm showing you here is from 12 and just going across for a couple of charts here, the multiple entries, and there was one actually just there where, and you're bouncing off a high of day, and there's great divergence there as well. All of these are genuine ultimate entries that anyone would pick. Now the important thing here, are they tradable? Look at the time frame down the bottom here. Okay, now that's 1252 318, very important. Now this is a 4 tick Renko. The 2 tick is not tradable. Well, maybe if you're using market orders, I like to use buy stops, sell stops. So if you're using market orders, you're going to get slippage, and it tends to be too fast. Now what we do want to really look at then is the live trades that I took. Now what I've done is I've recorded these trades. So in session 2, and we'll go a bit longer because I want to get to the charts and show you today's trades, but in part 2 I'll walk you through and play back the live recording of these. There's no voiceover. Traders, when I trade, I like to be focused, so I just hit record, and so I'll explain those to you. So here it was 3 out of 3, but what's important is the setups are mechanical, rules-based setups. Now just here for members watching this, because I have a lot of members here, you can see here that was a 2B, we had a 2BD here. First lesson I'd like to just give you here, this is called angulation, traders. When you see price action strongly angling away like this, it becomes a reversion to the mean trade. It's going to snap back. So we look at both your higher time frame and of course what's happening on your entry chart. It doesn't take long to start to recognize these patterns. Look at that angle, angulation. Okay, that's what we're looking at. We then pull back. Now if you took your 2BD there, by the way, you would have been stopped. Now a 2BD is where I have multiple EMA bounces but after major divergence. And what a 2D means, I've got 2 divergences. I've got divergence on 2 major time frames. So when you've got divergence and angulation, any trade straight after that are much more likely to fail. Sorry, I just keep looking at the clock as well here. So then we ended up having 3 trades straight after another. Okay, I had one just here. See this here, this is a major EMA. So I have what we call a T10. A T10 is a reversal concept that in this case it's set up on your anchor chart 1. And this is why it's so important that you learn particularly to trade with both an entry chart, which is a lower time frame, and you then have a higher time frame which you refer to. And this is a very mechanical setup. It's based on a pattern, very easy to pick. So I shorted there. Note here how you bounce here, you bounce here, you bounced, and then I was short there and I then added to my position. Why? I was in the green, and it's called a T20. It's a trend continuation setup, and down we went. Now down here, and we'll see this when we go to the charts here, I then had a beautiful bounce here with great divergence. But this is where you've got to learn how to trade pivots. Very easy. What I had down here is, this is called the RM2 midline. It's the 50% level in between pivots. Note the angulation. Why is that important? When you've got angulation, you are much more likely to have a deeper retracement. And we also had divergence. Now for members watching this is also a T3. It's on both the entry chart and the anchor chart one, and a T3 is just a very mechanical rules-based strategy that I teach, and we had it not only on the entry chart but on the higher time frame. So I also teach and you don't have to do this, the young guns will keep going. I believe in what I call POQ, power of quitting. My target is, in this case, 225 a contract. Here I was up 308 per contract here. Now there then was another perfect potential entry just there. Okay, for members watching, you know what that is. That's a 2BD. So down it came. You had another perfect entry there. Now when I say perfect entry, see the black dots and see the arrows. Okay, so you've got the arrows, so that plots within one candle. Some of them it plots right on the candle. Now I know Renko technically means bricks, I just call them candles. Okay, and then you had another beautiful 2D potential entry down the bottom there. Now and here it is here. If you missed that, you then have what we call a T10, and then up we went. And in fact, I'll tell you what, let me show you this. I was talking to you before about patterns, geometric patterns that appear in the market each and every day. Let me pull over and show you the 6J. Now the 6J traders, was it the 6J? Yes, it is. Okay, this is really important. See this, but now this is a screenshot, so we're running out of time, but if you're not in this video, we'll in the next follow-up video we'll look at this. But see this pattern. What you've got to be very careful of, traders, when you have very deep pullback after angulation, this is what happens time and time again. Now note the angle of price action just here. Note how we pulled back to the 200. We came down, we then pulled back further. What can you see just there? Now remember, this is in the afternoon. This is at 2:21 in the afternoon on the 4-tick RTY. Higher high on price. Now I've got divergence, and now we end up on our merry way. By the way, for those that use fib levels, that was an exact 61.8 off a pivot. What I want to show you here is the 6J. I want you to remember, let me expand this, that pattern you just looked at right there on the RTY. So look down. Oops, you can't really see it there. Let me drag it up so you can see the time frame. See down here, 750. So this is 1750, and this is, as I mentioned, is on Sunday. Now Sunday, this is the Globex session there, just so you know. And for all those idiots out there that want to say, oh, I'm using pre-recorded, or the bullshit that they carry out, it gives me the shit. Sorry about my language. Traders, no, I won't even go down there. This is the Globex session, and this is the live trading session. Okay, it's not when I say, of course, it's a recorded session, but this is live data. Okay, so we're ticking over here. It's not pre-recorded. So if we go over here to this particular setup, to this pattern, which you could just specialize and trade this pattern for the rest of your life. However, you only get a few a day. That's the challenge. But let's look at what we just looked at on the RTY, and let's look at this. What do we have on the RTY? Angulation. We pull back to the 200. Okay, and there we had the divergence once again, and bang, look what happened. Now let me just turn on the trigger point indicator for you to show you the turning points. I'll just pause this for 1 sec. Okay, it's on. So you can see the arrows here. By the way, the arrow offset you can vary. So what are we looking for when we have a retracement? Once again, I want you to notice, and actually just a point, it's probably good for you to see this. When the market opens up, the Globex session, we can see here on Sunday the 1st of December, the market opens, we come on down. Your best setups are generally going to be when we have a pullback to the EMA, and you've got one right here, back to a major EMA. Note the trend. Now let's talk about 100% mechanical setups. We're trading in the direction of the cloud. Okay, this pink line represents the low of the trading session. So obviously when the market first opens, we've now set a new low. The other thing is too, I don't trade the first 5 minutes of the open of a Globex session, particularly on the NQ. It can get very choppy. Okay, down we come. So you had another entry just here, down we come. Now I want you to notice, now we're starting to get a lot of angulation. Angulation is where we start to see price action angle away, and I want you to now notice the divergence that we're now getting here. Now this is what we call a zero lag MACD. Now if you've got a trading platform, of course I've got all of this for NT8 and TradeStation, but say if you've got TradingView or another trading platform, I give you the settings that you can model every one of these on using common indicators. Note here now we've had a deep pullback, and this is a 200 EMA. Yes, some of these bounces will actually work out, but I want you to be very careful when you have deep pullbacks. This is where, do I have divergence? Now I've got a slightly higher high, can be a double top, and now I've got divergence right there, and bang. Now traders, you look at this and say, oh look, this isn't much of a move. To trade this market correctly, and this is on the 6J, you need to have ideally about $3,200 to trade the full contract. Now I know your brokers will tell you that there's an intraday rate where you only need $500 or even less on some of these markets. Traders, money management. If you want to learn how to trade professionally, if you don't have the margins, in fact I've got to show you something on this PowerPoint in a moment, which is so important of this. I want to show you how quickly you can build up with this. But here all you need is 25 ticks a day, and that's a 5% return on your money. 25 net ticks per day, that is 25 of those steps a day. Now trading with the trend, you don't have a setup right there. Deep pullback, we actually call it a bet the farm, by the way, and away we go. Okay, so and look at this angulation again, and this is where you then go and look at your anchor chart, because you probably find, it's also for members watching, yes, it's a T3. Now a T3 is really pretty much a 100% mechanical trade entry. We enter the trade, we're going to be in on the third candle, and our stop goes one tick below the swing. It's very mechanical, very high probability, but look at the angulation, and that's one of the reasons why. But let me show you this trade, and I just want to show you. So just before we got underway, this is a trade I took. Now the chart I showed you was what we called a 4-tick anchor chart. This is a 4-tick trading chart. It means nothing. You learn what that is. Notice here we pull back, and yesterday's close, see these lines here, these are all pivots or the low of day. Once you understand what they are, they're very simple. Why did I decide to take this trade? I pulled back right there. I'm bouncing off a pivot. I had divergence. I also looked at my anchor chart 1 and I had divergence there. I had, see that black line just there? That is a major EMA on my anchor chart, and we bounce off that major EMA every day. Well, you may say, well, look, you would have been stopped if you took the trade there. No, we don't have an entry until our trigger line actually turns, and see the arrow up there. So we don't have an entry until then. Now you may look at that and say, well, look, it's not much of a move. Traders, each one of those steps is $10. Okay, now to trade this particular market, you need between 4,000 and 4,500 to do it correctly. Forget the BS on the day trading margins. Reason being, we never risk more than 2%. Okay, it's absolutely critical you follow this rule. Now each one of these steps, then, to have a 5% return on your capital, and the compounding effect is massive, is you only basically need 20 steps of these a day. That's around $200. We want 225 a day for a 5% return. Sorry, I've got alerts on these signals going off in the background of my headset. So but look at the trigger line here. Okay, you can actually use the trigger line for your trade entries and your trade exits. Now look what's happened here. We've bounced off a pivot, bounced off a pivot, bounced off a pivot, bounced off the pivot again. These are patterns that we see each and every day. Look, we're 36 minutes into this video. Let me finish on this one, traders, and then I'm going to record. Look, I'll try to do it now, but I want to get it. We've actually got another trade setting up here now, but what I want to do is what was I going to do then? Quickly show you this here. Look, no, I will finish. Look, I wanted to really get in and just talk to you about look, I won't go about the live trading room. We won't talk about that. Look, we will finish. We're 36 minutes in. I'm going to record session 2 here, traders, which you'll get within a day or two. Come and join me. Okay, you can come and learn all of these. If you can't attend the live sessions, you can watch your recordings. $197 gets you all of the indicators. These are mechanical. Actually, I've got to say this. The setups are 95% mechanical, 90 to 95. Where's the variation? Are you trading the right market? Are you trading the right time frame? And is the market tradable? That is, the time frame actually tradable? Okay, so there's a couple of things there that don't make it 100% mechanical. It's a bit like some of these setups. Traders will say, why don't you just create a bot for all of these? Well, traders, you may notice I'm looking for markets that trend or that are at extremes, reversion to the mean setups. Why? Because they kick butt and we get them every day. Sorry, I'm just checking something over here for you, because we see them each and every day. Just like here on the 6J, talking about the 6J setups. Now with this here, you know, and this is where I crack the shits that some of these people get on the internet. Oh, you can't trade this is BS. Well, traders, what do we see here? For a start, let's look at the speed of the market. Okay, we can see our entries. Now we call that a 34B. So there's a 2B. That's a 2B. These are mechanical entries. 2B, 2B. What we have to be careful with these setups is, do we have what we call blue skies ahead? And what I mean by that, we want to check where are our pivots. Now right here on this one, actually, do I have on this right hand side? Actually, I may not have. Let me turn these back on one sec. No, in fact they already were on. They were just way down. So and I should just point out, see the white paint bar? I call that my super scalper. So you've got multiple entries, but the point here is or are the trades mechanical? What's in front of us? Look at the speed here. This is the ideal time frame. Now if you're trading the 6J, by the way, the 2 tick kicks butt probably 90% of the time. You might find the New York session it speeds up a wee bit, right? But that's what you're looking for. Look, I will finish up and do this other video because there's so much I want to show you here. So become a member, come and join us, and you'll get all of this. And remember, you can attend for live sessions. I can only give you so much in these sessions. And yeah, traders, I'll see you on the next video.